Right, so welcome to Bangalore Investors Club's India Market Review for 6th September 2016. It's a Tuesday and it's just about 12 noon right now. 5th was a holiday on account of Ganesh Chaturthi, so hopefully Ganesh is smiling on all of us for the days, weeks and year ahead. And we had a long weekend, so there was no IMR last Friday. That's when we usually have it. So we're having one now. It's of course midway through the market day, so we'll perhaps also look at some live market action. So without further ado, let's jump in. Essentially, the question for today's session is this. Are we looking at a potential bull trap, or are we looking at new possible life highs on the index and of course many individual stocks? In the last week's IMR, in case you're watching it, we said that there were a lot of top reversal patterns that we had found on some of the indices, notably the Nifty Next 50 and quite a few of the individual index stocks. And in spite of that, the market continues to rally up, and from the week gone by to now, the Nifty is actually gained about 200 points, almost 300 points perhaps as we speak, right? So if I just put it on the, as of now, we are actually about 80-90 points higher than Friday's close. So this rally up continues and we are almost at 8,900. So one of the reversal patterns that we were speaking of, which has not broken down, is this head and shoulder top, which you should be able to see here. Where was it? Yes. So if I just put it there and I okay, so you can see what we are talking about here. You can see what we are talking about here in terms of the head and shoulder top, which had a sort of breakdown but then has continued to now rally up. So is this a failed head and shoulder in terms of potential breakdown, but the breakdown not following through, and are we actually seeing some much higher a lot of strength in the bulls? One of the issues last time was many of the stocks that had gone up on lower volume. So one of the things we want to look at in this time's IMR is to see how this 300-point rally on the Nifty has panned out as far as volumes are concerned and how the volumes are continuing to pan out. So if you come back to our regular candlestick chart, right? So it's like we had 2-3 days of consolidation and then we have brought it up again today, right? So that's the main area there. If we actually look at the other indices and notably the Nifty Junior, this is where the Nifty Junior is, and this ascending triangle, I would think, continues to pan out, and we are still very much within the confines or the parameters of that, is what I would think, right? That being the life high. And if you want to perhaps quickly look at the markets right now, so there you can see that the Nifty Next 50 is at 23,300. It's one of the biggest movers today 1.17% up. So 23,300 in the context of this. If I were to just take this line and put it at 23,300, right? So it is there, and well, that would make our upper line at least go this way. But we can at least, the way I'm looking at it, it still looks very much like a ascending triangle. So there are two issues here. One, pre-existing bias that anybody would have, and I'm having that right now, which is I have a view from my earlier um, analysis saying that this is an ascending triangle, and part of my brain wants to reaffirm that because no one likes to be wrong. There's just a view that is wrong. It's not I who am wrong. But on the other hand, I have to be conscious that things could have changed, or my analysis could have been not completely on the mark, and maybe we are looking actually at something else and not really an ascending triangle. Having said that, if I just leave it and put a big green candle here, then I would say looks like we are still looking at a potential ascending triangle here, which means that we could at any time fall. So one of the things we want to again look at is the volume and indicators. And if you look at the volume and indicators right now, you can see at least on the RSI here, right, things not really looking very good. Very good up move today, you'd still have a divergence. MACD very much in the positive. That's fine. Not really. There is divergence, but we'll leave it at that for now, right? And if we go back to the NSE, well, you can more or less see that we seem to have a divergence there, which has in a sense, right? So in a sense, it's got it's are we looking at a divergence trap? For those of us who know what a divergence trap is, so really no correction in the price here, though there is a good divergence of the RSI. Market's gone up again, and will we or will we not actually see a strong pullback on the RSI? We'll just keep that level in mind for our future reference and continue to track whether that's going to crack or not. So that's quite a strong level at about 70, 71. We'll have to wait and watch how that pans out. So as of now, we're possibly looking at a divergence trap. We'll have to wait and watch. Right? Okay. So to put it in a very quick nutshell, on the NSE, on the Nifty rather, we have seen a head and shoulder which has not panned out and or broken down as one would expect, and has gone up. Is that a sign of strength? And if you look at the indicators, we continue to see that as far as the indicators are concerned, there is still weakness. You can have a very strong bullish market in which the indicators will diverge, but the market will continue to rise, and we want to then ignore that divergence. So that is one of the things we want to also be aware of. On the other hand, I will be looking at a divergence trap, right? So this is one. And on the Nifty Next 50 or the Nifty Junior, this ascending triangle is another issue that you want to not forget. If I look at the weekly chart, then we're still quite a bit of strength on the uh, Nifty Junior, right? And I would assume that we are going to see that in the Nifty also. So in the Nifty, we are coming back close to the life high, and you can see that all the indicators on the weekly charts showing ample bullishness, and really no sign of weakness there yet. So short-term weakness, but long-term strength still very much there in the index. All right, so with that, let's now jump into our Sector analysis, or actually before that, why don't we have a look at how the global markets are doing. So this is the S&P 500 on your screen right now. So that was also a little bearish last 2 weeks, but now it's gone up again. And if I have to, like, take this back, then okay, let me come back down. So we have clearly a new life high on the S&P 500, and we want to move that up and see if that breaks out. Okay. If we look at the Nasdaq, more or less the same situation. It's been consolidating for about what, a month now, and really not gone up. We'll have to wait and watch. There was some news about some employment data not being very good, and then the thing about the Fed hike perhaps not happening very soon. Well, this could, what you're seeing on the uh, charts right now as far as Nasdaq, S&P is concerned, could turn out to either be a consolidation, or later on we may call it a rounding pattern. So we'll have to wait and watch and see how that pans out. Looking at Europe and starting with DAX. So we got this updated till the 5th, right, yesterday. So the DAX also had broken out of a resistance, seems to have consolidated there. And is it going to break out of there now or not is the question, right? So there's waiting and watching on the DAX there, on the FTSE. So this is interesting. FTSE has really jumped up. It was coming down, and then it's just I don't know what's happened to the volume data here. Looks like we've got some issue here, right? So, but yesterday, or rather on the 2nd, big up move on the FTSE, taking support on the 200-day exponential moving average, etc. And looking at just for our information, some other global markets. If you look at the Nikkei, very important resistance at that 16,900 mark, and it has essentially been able to break out of that, and perhaps setting itself up for further moves up. So that's on the Nikkei. And then looking at the Hong Kong Stock Exchange. Okay, so that's really done well. You can very clearly see that consolidation, and then actually nice gap ups, right? So Hong Kong is going up, and then we've got STI, right? Singapore, we don't have data for that. All right, I think so. Overall, let's look at China. Right, so China consolidating clearly a little bit, right? So overall looks like globally the market seem to be in a pretty, I wouldn't say very bullish, but definitely in an uppish mood, which makes us wonder, as far as India is concerned, we also probably should be going up. So till the last week, at least on the US and the European markets, the view was a little bit bearish, flat to bearish, and that supported the Indian view also. Now, these are the times you will have these phases in the market when the market is going to give you, in quotes, conflicting opinions. And why I say conflicting is I'm still very much looking at what this may mean or may not mean on the Nifty next 50, right? Even though it is making new life highs right now, definitely mid cap is the space to be. But is that cause of concern, or is it something we should just blatantly be long on? It's an iffy situation. So I would say right now still not the time to short. Should be cautiously long and make all trades and positions from that perspective. Okay. So having said that, jumping into sector indices, we've got Bank Nifty, which broke through 19,000, close to 20,000 now, and continues to rally away, and very close to its life high, and quite likely it will probably reach its life high there at 20,600, and then who knows, much higher levels are possibly in the offing. So if we just looking at the extreme long-term situation here, and let me see if we can, right, some double channel sort of formation, and well, just notice something here. I want to extrapolate this. Okay, and we have just crossed that. Then do we get a free ride all the way up to new life highs and then higher and higher and higher, right? So we'll have to wait and watch on that. So Bank Nifty is definitely looking quite healthy. We need to look at PSU Bank Index, and if we look at that, PSU Bank Index also seems to be ready to break out. You can very clearly see this consolidation formation here, and probably it has done that today, right? PSU Bank Index much closer to the moving averages than to the long-term moving averages than the Bank Nifty itself is, right? Bank Nifty a little bit far away from the 200-day moving average, but the PSU Bank Index clearly, well, actually more or less similar, I guess. All right, so in terms of potential breakouts, maybe the PSU banks are perhaps a little better trade than the private sector banks, right? Okay, and then we come down to the auto index. Well, so auto sales have been quite impressive, and the auto index continues to go up and up and up. Only one small bit of concern is you can see that you're getting these long upper shadows in the auto index and small bodied candles. Well, again, that's something to warrant some amount of caution. We've got a pretty hefty um, run this year from February 15,000 to 22,000 now, and it looks at this point no cooling off at all, and on every parameter, including the indicators, it's all looking quite strong. So autos definitely a place you perhaps want to be long on. Again, be careful of the small candles. All right, capital goods, are they stuck? Are they ready to break out? What's going on? What's important is very close to the long-term moving averages. The indicators seem to have bottomed out and seem to be giving you some strength. Stochastic, though this is actually too short in terms of periodicity, is perhaps giving us a bullish divergence, though I wouldn't read too much into it, and has gone into the 75 side, though it's mostly consolidation. Well, capital goods may be one place where there is some amount of good opportunity in terms of something that hasn't run away and something that is actually sitting on very good supports, long-term supports. So in terms of risk, risk is probably less, may not, unlikely to fall down a lot, and if it does, you've got some very good stop loss levels, and if it breaks out, then could rise up of definitely of several percentage points, right? So that is one thing to keep in mind. And then if you look at that, so capital goods is a potential opportunity in terms of a breakout trade. FMCG looking like it is breaking out. Month or so back we were talking about Patanjali and Sri Ayurveda and all these other domestic players, and looks like as far as the stock prices of all the FMCG guys are concerned, they really haven't been affected by all the domestic competition and the nationalistic flavor about that. So who knows? But again, you've got these long upper shadows, something to be aware of. Monsoons a little bit iffy now, actually. At least in Karnataka here, we're talking about uh, dams having only 40% capacity. That's definitely not good news. We'll have to see what happens. I'm not sure about how there have been floods. Are we looking at uneven cropping in the coming months? So I think I think one thing is very clear. The monsoon, while it has been there, has not really been as normal and as even and as um, spread out as would have been required, or rather would have been ideal. So that's one thing to keep in mind. Why do we talk about this with the FMCG? Because of the rural economy, right? So this is one thing. Then if you look at the IT index, we've been very bearish on that for a long time, and the BSE IT index just continues to go down, and at a very critical level, I must say, right? Could even be brought down here. If this level breaks, then we are definitely in for much deeper cuts. So the whole of this year, we've got a sort of in a sense, if you can look at this, you've got one big left shoulder, one head there, and then one right shoulder there, and of course the breakdown didn't happen. Then you've got this big sort of head there, which consists of a lot of patterns in between, triangle, symmetrical triangle, let me leave that back, which broke down and then came down to this support, but the breakdown again didn't happen. Again, we've got this, and we've got a very clear rounding top there. So in a sense, this could be a very, very complex 1 year head and shoulder, left shoulder, head, right shoulder. And also what is useful to note is this particular trajectory. You can see that each of those complexes in terms of this, the middle one here, overall have lower highs. And if you move that to the weekly chart, you should see it better. Okay, so essentially what you're talking about on the weekly chart is that, right? And also what we're talking is this, right? So in a sense, I would say a big massive rounding top formation which has happened, at the very least a consolidation if you don't like the rounding top idea, right? And if we break below 10,200, then definitely I think we are looking at much lower levels on the IT space. Even the indicators, really not much of any strength, and I wouldn't want to read anything. There is potential bullish divergence, right? But I wouldn't want to read anything into that right now. Just looking at the CNX IT, which will probably be more or less a replica, I'm sure, but just wanted to see if there's anything else which is there. Well, the CNX IT in a sense a little more bearish, if I may call it that. It's gone down here even more, and looks like the sell-off is happening on higher volumes, right? So the BSE IT, if we look at this fall is what I'm talking about, right? It's clearly down, and looks like from the situation here, the IT stocks have a lot more pain coming. There doesn't seem to be any respite at this point, and below 10,400, 10,300, IT should most likely fall much lower. Any bounce on IT should be used to short. Any good support is probably only at 9,500 or 9,200, 9,300 or thereabouts. Okay, so IT continues to be in a poor shape, that's for sure. Capital goods was looking perhaps bullish. FMCG, we did IT. Let's look at metals. So this is one thing which has been, just massively going up, huge up move at this point. Question is, are we now seeing a tired move there? And what do I mean by that? This is where we are. So this is the negative divergence, right? And this is where it has been, in a sense, going up. I'm going to remove that and this, right? Okay, so that's the negative divergence. MACD or sort of also cooling off, and metal index at an important support zone of 9,900, and if that breaks, then we are definitely looking at I would at least say some decent correction, because we've run up in a sense without any big correction for, in terms of time especially. If I especially take this to um, weekly chart, then what you'll notice is that apart from April, right, there where we had 4 weeks of down moves, you really have not had any correction from 7,500 to 10,000. So time-wise correction or a price correction or both is perhaps quite warranted, and we'll just have to wait and watch for that, right? So metals, well, I would say at the very least consolidating, could be technically good places to go long with good support levels right there, but I would definitely be a little circumspect in saying go gung-ho and buy it. MACD's moving averages is like really far away. It's run away from the support levels right now. So iffy at best. Power index, well, again, I think you're going to see divergences, and there you go. These sort of things can last for months before they actually pan out in terms of price action, and they really test the patience of any professional trader or investor. And sometimes you keep wondering whether you're on the wrong side, and one fine day you will get vindicated. But you can't, I'm not saying that on the basis of feelings, but I mean that's the nature of the market. So power index also looking with a bearish divergence, and again that's also run up like metals from 1,000 to 2,000, sorry, 1,600 to 2,000 without any meaningful time correction. So we'll have to see what happens there. And coming to reality, that's already cracked, as you can see, right? So after consolidating, we had been speaking about this. If you go back and look at previous IMRs, you will see that reality did, we were circumspect about it. It's gone down, and looks like from the point right now, it's got further down to go. Really no sense of strength or support anywhere. Let's look at the chart. We come to some support there. I would say, think not. We still need to correct a little bit, right? So that's where we are, right? And so maybe 1400, so about another 5% down on reality is definitely something that we want to keep a track of. So reality also looking weak. So the only thing really looking gung-ho in my opinion is autos, and that also a little iffy with the sort of up move it's been happening, and to some extent maybe capital goods with the sort of support which are there. Otherwise it's all a little bit here and there. and mostly on the downside. Okay, so the downside bias actually gets reinforced, and basically now I want to basically figure out what's actually making the stocks go up. The index go up when you're seeing so much bearishness. And like I said, as we continue to look at this, we've hit 8900, as you can see, right? So 90 points up. And what's really driving the market up? Well, let's have a look at that. All right, so you have this is basically the movers of today: Axis Bank, Tata Steel, Yes Bank, Tata Motors, IndusInd Bank, Grasim, Tata Motors, Bank of Baroda, Maruti, ICICI, Bosch, Hindalco. So all these, and really nothing in the green, red right now. So everything is looking quite healthy and bullish, right? Though again, I would say that a little bit circumspect about this. So I want to basically look at how volumes are going in the last week and today, and let's see if we can get some insight. So to reiterate, are we looking at a potential as the market rises, tighten your stop loss for the longs and maybe a good time to get out and exit the market? Perhaps even be ready to short, or is the market now just going to hit new life highs and you should actually be adding to the long? So that's the dilemma right now. And like I said, if you've been consistent or a regular viewee of our IMR, you'll see that this happens in various phases. There's sometimes when it's very clear what you should do, either long or short. And then there are these iffy times when one is really not sure, based on all the best analysis that you can do, whether you should do this or should do that. Best thing to do at such times is to trade light, to invest light, and to be ready to take action, especially if the market goes against you. To be able to jump out, put at least alerts in the system to tell you that something has happened. In terms of a trading or investing approach, it would definitely be a good idea to reduce your capital size or your trading sizes or positions, either which way, right? If you were short last few days or 1 or 2 weeks, you're definitely losing money. If you were long, you'd be happy making money, but like you saw in the analysis so far, we could actually be turning down at any time. Or, now of course there is Diwali which is coming, and a lot of festivals and car sales are up and all that. But well, TA is TA, and the market speaks for itself. And if you look at, I think the reviews of the fundamental stuff, nothing great in terms of quarterly and annual results, in terms of profit increases by the various companies. So that's another thing to keep in track, which basically means the market is becoming fundamentally more expensive week by week, right? And that's definitely not a good sign. Okay, so this is for the index review, and then we will now look at all the Nifty stocks and do the Nifty review, right? Okay. All right, so I'm going to make this into a different section now, and we'll have that as a separate webinar and a separate recording. In the meantime, if you have any questions or if you have any suggestions about how this session went, please do get in touch on these contacts and let us know how it went for you. And if you have any suggestions, would love to hear from you. Thank you.